Have you ever stood at the checkout at Woolworths or Coles, looked at your total, and thought, hang on, that can't be right? You're not imagining it, and you're not alone. A new survey out this week found that 72% of Australians believe Coles and Woolworths have been and still are price gouging them at the checkout. That's nearly 3 in 4 people. And from July 1st this year, for the first time in Australian history, that kind of pricing behavior will actually be illegal. Today we're breaking down what price gouging is, what the new law does, why both supermarkets are pushing back, and whether it will actually make a difference to your grocery bill. Let's start with the scale of what we're dealing with. Coles and Woolworths together control roughly 67% of Australia's supermarket sector. Two companies, 2/3 of the entire market. And over the past 3 years, as cost of living pressures have squeezed Australian households from every direction, the profits of both supermarket giants kept growing. Woolworths reported net profit of around $1.7 billion in its most recent financial year. Coles was not far behind. At the same time, grocery prices in Australia rose faster than in comparable countries. The ACCC, Australia's competition watchdog, ran a full 12-month inquiry into the supermarket sector, using compulsory investigative powers to demand data and documents. Its conclusion was damning. Coles and Woolworths have limited incentive to compete vigorously with each other on price. In other words, the two giants at the top of the market aren't really trying to undercut each other. And without that competitive pressure, prices stay high. Then came the prices dropped scandal. The ACCC took both supermarkets to court, alleging that Woolworths and Coles had raised the price of hundreds of products by at least 15% for short periods, before placing them in their promotional discount programs. Woolworths' prices dropped and Coles down at prices that looked like a bargain but were actually the same as, or higher than, the original price before the spike. The ACCC alleged this affected 266 products for Woolworths and 245 products for Coles across periods of 15 to 20 months. That case is still working through the courts. So what exactly is the new law? From July 1, 2026, it will be illegal for very large supermarkets, specifically retailers with more than $30 billion in annual revenue, which currently means only Coles and Woolworths, to charge prices that are excessive when compared to the cost of supply plus a reasonable margin. This is a significant departure from how Australian competition law has traditionally worked. In the past, the law focused on protecting the competitive process. Price fixing between rivals was illegal, but simply charging high prices, even very high prices, was not. You could charge whatever the market would bear, and the law had nothing to say about it. The new law changes that fundamentally. For the first time, the price itself, not just how it was set, can be unlawful. If the price is excessive relative to what it costs to supply the product, the law is broken. The penalties are substantial. The maximum fine per breach is the greatest of $10 million, 3 times the value of the benefit gained from the breach, or 10% of the company's annual turnover. For companies the size of Coles and Woolworths, 10% of annual turnover would run into the billions. These are not token fines. ACCC boss Gina Cass-Gottlieb has already put both supermarkets on notice. She said it was likely the regulator would launch legal action against Coles and Woolworths under the new laws, whether it happens in the first year or somewhat after that. Both Coles and Woolworths have pushed back, and not quietly. Woolworths said it works hard to deliver value to customers every day and takes its responsibility to deliver clear and accurate pricing seriously. Coles said it will continue to deliver value through discounts, specials and promotions, and remains committed to meeting its obligations. Both companies have flatly denied price gouging. They've also raised substantive concerns about the new law. Their argument is that pricing is genuinely complex. Supermarkets factor in a huge range of costs: supply, manufacturing, transport, logistics, warehousing, labor, rent at every step of the supply chain. Requiring them to justify prices against a cost-plus formula sounds simple, but in practice it demands a sophisticated data reporting and monitoring system that doesn't yet fully exist. And if supermarkets become overly cautious about pricing to avoid regulatory risk, they might actually offer fewer promotional discounts, which would hurt the very consumers the law is trying to protect. Some independent economists have acknowledged this is a real tension. Price regulation carries risks. High prices don't always indicate market failure, and if retailers respond by raising floor prices rather than reducing ceiling prices, consumers could end up worse off, not better. It's a legitimate concern, but consumer advocates aren't buying it. Choice Australia's main consumer advocacy group has pointed out that the European Union already bans excessive prices, and more than half of American states have price gouging laws during times of market disruption. Australia isn't breaking new ground here, it's catching up with countries that decided, long ago, that market dominance doesn't entitle companies to charge whatever they want. So what should you actually expect from July 1st? Honestly, probably not much visible change at the checkout on day one. The ACCC needs time to monitor pricing data, identify potential breaches, build cases, and pursue enforcement action. Legal proceedings take months, sometimes years. What you might see more quickly is supermarkets becoming more careful about the kind of promotional pricing that landed them in court in the first place. The prices dropped style of pricing, raise the price, then offer a discount back to near the original level, becomes significantly more legally risky under the new rules. If the ACCC is watching closely from July 1st, the incentive to play those games diminishes, and if significant penalties are eventually imposed, that could have a real deterrent effect going forward. The size of the potential fines is genuinely meaningful, even for companies the size of Coles and Woolworths. But the honest answer is that this law, on its own, is not going to dramatically cut your grocery bill. It doesn't cover Aldi or other smaller chains. It doesn't directly cap prices. It doesn't break up the duopoly or dramatically lower the barriers to entry for new competitors. Structural reform of Australia's grocery sector, the kind that would genuinely change the competitive dynamics, is a much bigger, much harder political project that no government has been willing to seriously pursue. This law is one step, an important step, but a step. Here's what this moment actually represents. When 72% of Australians believe a duopoly is ripping them off, and when that belief is backed up by a major ACCC inquiry, active court proceedings, and years of documented evidence, the political pressure for intervention becomes overwhelming. The government has responded. The law has passed. July 1st is coming. For decades, two companies have controlled what most of us eat. They've set the prices. They've run the promotions. They've decided what counts as a discount, and most of us have had very little choice but to pay whatever they asked, because in many parts of Australia, particularly regional areas, there simply isn't anywhere else to go. From July 1st, there will be a legal line they cannot cross. Whether that line is drawn in the right place, and whether the ACCC enforces it aggressively enough to actually change behavior, is what we'll all be watching very closely in the months ahead. Have you noticed your grocery bills getting worse over the past few years? Do you think this new law will make a real difference? Or is it too little, too late? Drop it in the comments. I genuinely want to know what you're seeing at the checkout. Like and subscribe for more Australian news explained simply. See you next time.